Square stock is in the news, and we're going to talk about it here on Everything Money. It's Seth, Paul, and Mo. We're going to trade with Mo later in the video, so if you're interested in trading Square, you can join him. Paul's going to go over the financials of Square. We're going to see if is it a value play. Paul, is this a Cathie Wood stock?
Yeah, probably.
Looking at the chart, it must be, but it's got upgraded recently. Paul, an investment bank, Jefferies, assumed coverage of all the payments group. Apparently, is adding some validity to this. This is an exciting payment app, but with so much competition, Paul. You got the Venmo, you got the Cash App, you got PayPal. Where does Square fit into this? I use it. Our businesses use it. Does your business use it?
Yep.
Of course. And so let's talk about Square, the company itself, and how it translates into its stock price to see if it might be a buy for you at home. Go ahead, Paul.
Great. So it is a $112 billion company. So one of the things I would do is compare Square to PayPal because PayPal is kind of, I would think, the be all and end all of online payments right now. So they did $15 billion in revenue, which is higher than expected. 5-year PE of 825, a 1-year PE of 200. Okay, that's high. So that's an X there. And then we have return on invested capital 4.2%. That's an X. We won it over 9 over the last 5 years. But keep in mind that in the last year it was 11.4. So they were losing money in previous years. That's going to really drive down the 5-year return on invested capital. No shock. They don't pay a dividend, which I'm glad they don't in this situation. And the 5-year free cash flow was $251 million. But last year they did $680 million. Okay, so a lot of positives, a lot of momentum going in their favor. Let's go to this. So far, though, we have 2 X's.
It looks like Cathie Wood was selling off her Square holdings back in August, Paul.
Interesting.
Yep, keep going.
Okay, $1.9 billion in revenue to $15.9. Major growth. But Seth, look at the last year. It tripled almost in revenue.
Right.
So because of online sales, et cetera.
So pillar number 4 is profit growth over the same period, 5 years.
They went $78 million loss to a $573 million gain. So definite check mark there.
How about shares outstanding?
I am not shocked by this at all.
Right.
376 to 455. Look at this. In 2015, they had 284 million shares outstanding. Now they have 455 million. And again, to go back to that stat that we rarely look at, if every share that's possible to be executed right now happens, they would jump from 455 to 522 million. So there's a lot of potential for dilution here, guys. There's already been a lot of dilution, and on really expensive companies, they're going to want to dilute you because it's cheaper money than taking on debt. If you take on the debt, if you take $1 billion of debt, that debt's going to be on your books no matter what happens to your stock price. If you have an expensive stock, you issue $1 billion in stock, you get that billion in cash, but guess what happens? If the stock price collapses, you still keep that billion. It's no skin off your back, and you take advantage of the market and the people want your stock.
Pillar number 6 is total long-term liabilities divided by 5-year free cash flow, and we want this variable under 5, Paul.
So the 5-year free cash flow is $250 million. We multiply that by 5, it's $1.25 billion. So our goal here is to have the long-term liabilities under $1.25 billion. Why? A company with less debt is more likely to stay in business. Just like your neighbor. If you and your neighbor have the exact same lives, exact same income, everything, but for some reason your neighbor has $10 million in debt and you have 0, who's more likely to go bankrupt? Your neighbor is. So the longevity of letting these companies grow is important. And we go to the balance sheet, scroll all the way to the bottom. Long-term liabilities, $5.43 billion. Now, I will say this.
Go on.
This company is just now becoming cash flow positive. So I'm not as worried about this number as other ones. I would not put too much value in this metric because they're just now generating more and more free cash flow. Okay? But another reason why I like looking at more established businesses, because I want to see how do they look overall in their steady state versus all their debts and all their free cash flow, et cetera. So that's the caveat I'll put in a Square.
Wouldn't you agree that I feel like Square has done a great job of putting a very concise and well-rounded payment system in the hands of small business owners on the go?
Yeah,
I will make
very easy to transition them, very easy to get them signed up, et cetera.
Yeah, I make like in-home, and I can take credit cards on the fly. It's really easy, and a lot of companies are doing it. It's really incredible, the little kiosks they have when you
now
go
our developers think Stripe is easier.
I use Stripe as well.
You use both?
I do, yeah. Actually,
why?
One of my websites just prefers Stripe. It does get confusing on the books, but yeah, I use Square for my on the go. Like I'm swiping a credit card when I'm out.
Oh, great.
But if I'm doing online payments, I do use Stripe. So
online, we use Square, though, for us. Okay. We don't use Stripe at all, but our developers want us to use Stripe because the development side for Stripe is supposedly
It's funny with all this said is all this filters into my QuickBooks, and QuickBooks has now an invoicing system. So there's a lot of competition.
There's a lot of competition for it. It's a commodity. But I don't know which one's better, which one's worse. We like Square, we like Stripe, we like PayPal. It's just I like paying with PayPal. The second I see the PayPal Pay,
I love that too.
So click on it, boom, done.
Sounds better.
And even Amazon Pay. I love buying something. Like I went to Brooksville the other day, buy a long sleeve collared shirt. It said Amazon Pay. Clicked right on it, went to my Amazon account and bought it. Done. And then when I did the return, it was all handled, etc.
Pillar number 7 is free cash flow growth. This is one of our most important pillars, Paul.
Now, here's the interesting part. They've had free cash flow for quite a while, for the last 5 years, even though their profit wasn't positive. 122 to 682, that's a check mark, with 250 as the average. So what we do, guys, to start off, we take this 250, multiply it by 20. That's $5 billion. This is the market cap we sit there and say we want the company at.
You're kidding.
Now,
$5 billion.
Now remember, this is a growing company. 20 is probably not the reasonable number, but we do it as a starting point. So this is obviously an X. Now, what's the right number? I don't know.
Oh, before you go on, Paul, obviously an X means if we multiplied 5 billion times,
no.
Oh, that was, oh my
250 God. Million by 5 billion.
That was after,
by 20.
So in essence, the market cap should be around 5. It's 112 billion. But
so look at
go
this.
on, Paul.
We want the 5-year free cash flow under 20. It's 450.
But wouldn't someone say, okay, last year they made $600 million in free cash flow. Why would that ever go down? But there are reasons it could go down.
Well, not only that. So let's say this. If we want to pay, if a reasonable company sells for 15 to 20 times free cash flow, okay? Let's say we want to assign 30 times free cash flow to this business. All right, if the company is worth 112 billion, it needs to generate, call it $4 billion in free cash flow. It generated 650 million. Oh, sorry. It generated...
You're right. Last year,
680 million in free cash flow. Now, does that mean it won't get to 4 billion? No, it very well could. But if you pay for that now, to even justify it has to get to 4 billion mark. So anywhere between now and 4 billion, you've already paid for that growth. That's the issue when you have very expensive companies. Now, we're going to go to the stock analyzer tool once Mo is done to make assumptions and see where is this company going with its growth? Because growth is a very important part of value, right?
If you want to trade this with Mo in the BitNest Nation in our community below, you can click on the link, join Mo, and he can show you how to trade the process. Mo, what do you got over there? These lines everywhere.
So here I drew in 3 lines. These are my resistance lines that Square needs to get through. It gapped up today, and it's just sitting there at that first resistance line. So I'm going to zoom in here and just show you guys and that green line that I drew at the top, that was the all-time high. So it hit its first resistance line. And look at this candlestick. This is what we call a doji candlestick, where it opened the day, it came to the top up here, it went to the bottom down here, and it's just kind of bouncing around there. So there's no consensus on where the stock is going. That's what happens when you run into moving averages. And that's what happens when you run into resistance points, and that's what we just saw. So right now, this is a downtrend. You're going to have to be very patient with this. I would go over here to the daily chart. This is looking really good. You're coming up through the sweet spot very nicely on your daily chart. You're just sitting right above the 100-day moving average. Swing trade this up to the 50-day moving average or something like that. It looks like you're getting some pretty decent volume coming in. It's only 10:30 right now when we're recording this. So volume is going to come into this today, especially with the news. To me, go and swing trade. It's much better off right now than long-term trade.
Great work over there, Mo. Paul, what is going on with that stock analyzer tool behind you? You get this as part of our software. We will let you know at the end of the video. Go ahead, Paul.
Yeah, so we created the software because when we first started the channel, we were using this other system that was very expensive, and people kept saying, we want to get this data. So we created the software. It gives you a mobile app that does everything the website does. It gives you 30 years of financial data, all 8 pillars, stock analyzer tool, real estate calculator tool, a community for people to discuss things with on our app. So I'm looking at this, and the stock analyzer tool is one of the most important aspects. It'll allow you to actually value the stock, and this is all for 90 cents per day. That's it, 90 cents per day. It can change your entire financial future. It'll make you hundreds of times that amount just by signing up at everythingmoney.com or at Patreon link below. So sign up, be the best decision you make. Now, for the stock analyzer tool, what we're doing here is we can put our assumptions in, because all investing is making assumptions about the future, because we don't know the future. So I'm going to make assumptions here. I'm assuming 15, 20, and 25% revenue growth. And then I'm going to make my assumptions on share change, profit margin, free cash flow margin, PE, price of free cash flow, and then my desired return. So I make these assumptions. I put it in. I hit the analyze button. The stock is currently at 247. Okay, so this is where it's telling me it's overpriced. If my high assumptions turn out to be true, the stock still needs to fall by over half. If my middle assumptions turn out to be true, which is where I tend to go, this stock needs to fall by 80%. That seems like a lot. You're like, no way that'll happen, guys. I'll just tell you, go back to 2000 and companies that are still around today, that tech companies that everybody thought, no way they fall 80%. The ones that are still around today fell 80%.
Yes.
This is very possible. When the momentum shifts, the most overpriced companies get hurt the most. This stock was $40, I think, at the bottom of the COVID crash.
Yeah, $54.
Mention Amazon. Mention the Amazon price.
So Amazon, which is around today, was at 113 in its peak in 2000, and it fell down to $6 a share. And it rebounded all the way back up. So now it's at 3,000 plus a share. So the whole point is, even amazing companies with amazing future and amazing revenue growth can still fall by 95%. It happens.
This closed on March 18th, 2020 at $39.50.
So right there, right in my sweet spot, below my sweet spot right there. Mm-hmm. That's my sweet spot. So anyways, guys, and this is still assuming 25 times earnings and 25 times free cash flow with 20% revenue growth over the next 7 years. And something tells me that in 7 years, when it's growing 20% a year, should it be selling for 25 times earnings? I don't think so.
If you've been investing on a hunch, or your only assumption is that if you buy Square, it will go up, you can come to the dark side of everything money. The bright side of everything money, Paul. Look at the numbers. It's just, as Paul's always say, it's just math. That's how we get to these figures. So that's our take on Square. Thanks for joining us. Fondle the thumbs up and check out our community below. Thanks for watching.